What's up guys, Ben here with Highstrike, and today we're going to be going over my best and worst trades of all time. So in the last video we talked about my 7-year trading journey. I just want to give you some insight as to the peak of that time and then the low of that time, just to kind of put things in perspective. So obviously I'm going to start with the worst trade of all time because we're going to end on a good note. But worst trade of all time, I was sitting at work. I was actually trading at work. This was probably 3 years ago. At my job, and sitting there trading just simple SPY calls, and before I knew it, my entire account was in SPY calls. It was a small Robinhood account, probably $2,000 or $3,000. I think it was about $3,000, and most, like 98% of the account was in the position. I had averaged down until I couldn't average down anymore. There was no more buying power left. So a few things went wrong while this trade derailed, and I'm going to give you guys the lowdown on this whole trade, the start to finish. But basically, SPY, what I thought I was gonna do, I thought I was gonna have a morning breakout, and I was gonna be able to like triple my money in the account by the end of the day because the momentum would be crazy, right? I would just jump on the train and obviously it would go up, everything would go according to plan, and then I would cash out at the end of the day with a lot more money in the account. Obviously this didn't happen. Now, a few things were fundamentally wrong with my trading plan. One, I didn't have a plan for exit if things went south. So instead of cutting my losses at $300, which was my plan, supposed to be my plan back then, what I did was I continued to average down. I continued to add to the position because I was like, you know what, I'm gonna trust my analysis. I haven't been wrong in a really long time. I think that, you know, by the end of the day, this is gonna start recovering. And if I can get better prices on those options, even better. Let's just continue to average down and go all in on this position because, in the end of the day, it should blow up. That's what I thought was gonna happen. It ended up continuing to crash all day, and by the end of the day, my entire account was pretty much wiped out. Now, the biggest thing wrong here was I was not paying attention to the downside. I was only paying attention to the upside. As a trader, you need to be more focused on the downside than the upside because the downside is where it becomes game over, right? You continue to stack small wins, right? You're gonna continue to stay in the game. If you stack small losses, you'll also stay in the game, right? Until you can turn those around into wins. But if you take big losses, if you take huge chunks of your account out, that's how you lose the game. Also, emotions were a big part of this trade, right? I was sitting at work and like I couldn't even focus on work. I was just thinking about the trade. I would put my phone away, try to put it in my bag and just be like, I'm gonna forget about it and then check it at the end of the day. But then I couldn't forget about it, so I'd check it, see what the position was doing. It kept losing more, it kept averaging down, right? It was a kind of a spiral out of control, and you wanna, as traders, avoid these kinds of spirals at all costs. Now, this wasn't my biggest loss ever in terms of dollar amounts. I have days now that I lose even more than that, but it was the greatest in terms of account percentage. So wiping out an entire account like that is something that you want to avoid at all costs, especially at a beginner, because I think I took a week or two off of trading at that point because I was just like, I can't handle this at work anymore. I quit. The market, is unbeatable. It really just got into my head and I wasn't able to concentrate on anything else. Now I'll end the video on a good note, talking about my best trade of all time. My best trade, I think you guys have probably heard of this if you followed Highstrike or me for a long time. Now this is Enphase. So Enphase is a company that I identified a huge amount of unrealized value really early on in the stock's life when it was down at like $2 or $3. My average price isn't that low. My average price was about 17. But right now, depending on when you watch this video, Enphase is anywhere between $100 and $200. It's moving around quite a bit, but it has blown up. That value did get realized. Now, my best trade, I made over, I think, 180,000 so far in this position, just from identifying that value and being patient. So I'm gonna walk you through this trade, and you're gonna hear as I tell you, everything is pretty much opposite from what I did on the worst trade of all time. The big losers. Entering Enphase, I did fundamental analysis. Now, this is not a prerequisite for day trading or even swing trading, but it is for long-term investing. You need to know, make sure that company is fundamentally sound and has good things going on its balance sheet. So I did identify that value, and that's the first step to finding a good long-term trade, right? I did that, and I identified the risk-reward ratio. So risk was very low at the time because my position size wasn't very large. I think I started with a couple thousand in Enphase when it was down around $10 or $12. That was my average price back then. I continued to average up, and you can tell, by the fact that I averaged up over time versus on the losing trade, I averaged down over time. I was adding to a winning position on averaging up, made a lot more money. on the other trade, on the loser, I was averaging down, trying to save a losing position, right, in that spiral. So you can see the compounding effect in both cases. On averaging down, right, the compounding effect wiped out my whole account, and on averaging up, it gained me a 6-figure profit on one single trade. The other thing is that I was trading shares with Enphase. I didn't have that time decay factor of options that I had to pay attention to, that theta value or even the volatility value I had to pay attention to, right? It was strictly just shares, which I knew were gonna retain a lot more value over time, even if the stock price stayed the same or went down. Right, that's the main difference here between shares and options. And as a beginner, I really recommend that you stick to shares before you get into options. You'll make some of your best money in shares, right? Even though you don't compound your account day after day after day and completely explode it in the upward direction with shares, right? It is the most gradual and consistent way to potentially grow your account versus options where you have a lot more risk involved, as you can see with my worst trade ever. So on the best trade of all time, the Enphase trade, remember, I identified fundamental value in the company, and that's the number one thing for a long-term trade. Number two, I identified risk-reward ratio and averaged up as the company continued to do better and better. And number three, I bought on the pullbacks, right, continuing to add to my position. That's why over time, that position compounded. I think my average price is about $17 or $18, and the price right now of the stock is sitting at about $140. Depending on when you watch this video, it could be $160, it could be $120, but it's between $100 and $200 right now. And I am continuing to hold that stock because I do see a lot more unrealized value there. So let us know if you have any questions on this video. Pretty short one for you guys. Just wanted to walk you through my best trade of all time and my worst trade of all time, so you guys can have an idea in your mind of the struggle that I went through, which is probably pretty similar to some of you guys on the worst trade, and the flip side of the coin, which if you just do those, if you tweak your methodology just a little bit and you focus on a few specific things, you could have potentially really large trades become very significant profits for yourself. So hopefully that was helpful for you guys.